Hello traders, how you doing? This is Matthew Stevenson with Paragon Elite Trading and Paragon Funded Trader. I just wanted to go over trading gold and silver for a minute. And I wanted to show you a few things that I've learned recently. I have a chart specifically for trading these two metals, as they're kind of unique. They don't deserve to have the same indicators as forex pairs, because they're driven by different things. Their price movements are driven by different things, and they're correlated to different things. So let's dive into this. Just to show you what I have here, this is typical. I've got my Bollinger Bands at 3 times, my 50 EMA, and my 8 EMA is the white. And then down here I have the double RSI. The fast moving one is the 5, the slow is the 14. ADX, obviously, you know what? I want that to be, this needs to be a little bit more pronounced. The 25 level. So when the white line, which is the trend indicator or the trend strength indicator, goes over 25, that tells you that the trend is strengthening. And then obviously the red and green tell you which way. Now down here I've created this. So I don't know how many of you have talked about this but there's usually an inverse correlation between the dollar and gold prices, right? Because if you just look at the pair, if you have we're going to do white and we're going to do bigger. So technically this is X, let's try X, divided by USD. Well, this is the law of the denominator, right? So if the dollar gains strength, then by default gold against the dollar is going to weaken, right? So the chart's going to go down, and vice versa. So this down here is a correlation coefficient. You can go into indicators. It's just called correlation coefficient. I reprogrammed this one to just be to say the DXY, because I just have it for this. But I wanted to show you that because there are times when the correlation coefficient or the inverse correlation decouples, or it doesn't follow its usual trend. It should be down, down here in the lower. Let's see if I can. I'm just gonna make it so we can really see this here. All right, so we've got -1 to 1, but sometimes things get so dire that the market is racing for protection in both the dollar and gold. So if you see this correlation, and that's usually when the correlation coefficient goes between 0 and 0.5 or higher, that means that things are out of whack, and that gold is probably going to rally as well as the dollar, because that's the institutional world, and they're the smart monies, we can agree. They're looking at things and deciding that both the dollar and the gold would be a good place to allocate money to. So when the correlation coefficient rises above zero, the higher it goes, the more likely there is to be what's happening is institutional traders and investors are grabbing up all the supply. And as soon as that supply is exhausted, then it really runs. Okay? So, and this is on a daily, so that happened over a long period of time. And down here I have a ratio of the price of gold to silver, because they are both precious metals. Okay, so they are a safety asset, right? When things get bad, people rush to metals, precious metals, and silver is known to be the poor man's gold, but it is a less liquid market. And I'll show you the volume over here. It's less liquid and it costs a lot less. So usually the ratio is anywhere between 85 and 90. Okay, so when it gets, so if we're looking at silver, look at what happened to this ratio right before silver took off. This ratio was up around 100, 105, 110. That means that gold was significantly overvalued relative to silver, because they are still precious, both precious metals. They should contain the same protective and defensive properties as each other. But that ratio got pretty out of whack, and ever since then you can see that now it's down at 60.6. So there's no worry that gold is overvalued compared to silver. Another thing I wanted to show you is that, so if we have gold dollar up here, I wanted to show you that because silver is a less liquid market and it's priced a lot lower, when there is volatility, the moves in silver move a lot further, right? So, I mean, let's just take this move. I'm going to grab this. Let's start down here. Let's see, gold made it up till there, okay? It made it up 2.25%. Now, if I do the same thing for silver, this blue line is the silver. So that's 3.7%, and it ended up going almost 5%. So when gold goes up a percent, or down a percent, you'll likely see silver outperform it 2 to 3 times. And you can see this on every swing. If we push, let's get rid of these indicators. If we push the times where there is a massive trend, you can see the silver line it's exaggerated is what I'm saying. And we push it to this one, and it goes a lot further down than gold did. Push it there. So you have to be careful. Got a position size for risk, and you got to have your stop losses locked in. But these are just some of the things I wanted to show you about these two precious metals. And we can get rid of this. No. There we go. And traders and I have been mentioning lately that it used to be so predictable when the volatility would happen. Um, but lately, and it's still, I mean, you still have your normal volatility in the morning, 6, 7 a.m. my time, mountain time. Um, but you'll see spikes in just randomly throughout the day. I've had very good trading success in the early morning, so overlap between the London US session, and then in the evening I've had some good success. In fact, last week I caught, I don't know if that's the one I caught. Let's see. Did you see this gap down? That's why we don't hold over the weekend, folks. Look at that gap. That's a big gap. Let's go back here. When was it? Yeah, it was Thursday at 7. Okay, so I caught this right here as I noticed that, and this is 7 o'clock my time, so 9 o'clock Eastern. I noticed that volume all of a sudden just spiked and silver just plummeted. Now, I didn't ride it too far. I mean, every time it got outside of the 3 times Bollinger Band, I was definitely out. But that one went quite a ways. And then it came back here, went back up, and then when it started back down, I got back in. Because the volume is just, look at all this volume, it's just overwhelmingly bearish. And if we look at yeah, same time, gold did the same thing that day. But I got in silver just because the moves, when you have a significant move, silver's going to move further. Now, with anything, the greater the potential reward, the more careful you have to be. So just think of those things. But RSI, the double RSI, is a very good indicator for trading, either metal. And then the ADX, I've always liked the ADX. But these are two other ones that, if you see, they don't happen a lot. This correlation doesn't go above 0 very often. But when it does, just get ready for gold to follow the dollar, not be inversely correlated with it. And then also watch the ratio between the gold price and the silver price. I don't think we have to worry for a while because silver rallied so far that it's at 60.1, and it's usually at 80, 85, 90. So we don't need to worry that gold is significantly overvalued than silver. Another thing that causes the volatility for silver is that it's used in so many things. Electronic vehicles, it's used a lot in, and those are becoming more proliferated in the market. Electronics, obviously, medical applications, things that gold isn't involved in, silver is, and so that gives it more, that creates more moving parts to deal with silver. But it is a precious metal, so it should be in the same category as gold as far as, economy troubles and fear in the market. But these are just some of the things to watch for as we're looking at making these trades. All right. Let me know if you have any questions, and trade well, my friends.